Hello everyone, my name is Matthew Frailey. I founded Breakpoint Trades back in 2003, over 20 years ago, and since then we've been providing advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here, and of course our very famous KISS trend systems, which appear to be next level, applying virtually to any instrument. You can access those from the systems section, go to KISS STS tables, and from there you'll be brought to the KISS systems. For now, the public can view this, but this will be locked down soon. So if you're not a subscriber, consider joining to Breakpoint Trades. This is amazing stuff. You won't find it anywhere else. It's exclusive to Breakpoint Trades. Anyway, let's get started. The last video I did was on the weekend, on Sunday, and some of what I warned about transpired with today's big rug pull sell-off in the market. So let me go ahead and get this started for our subscribers. This is our back-end recording system. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, August 2nd newsletter. As you can see, the newsletter is divided into 7 major sections. We have various items to discuss with the website regarding some systems that took an entry today that I sent out a trade notification email, KISS systems, and then of course a lot to talk about with the market. All right. Now, as you know, today we had a rug pull in the market. What I've been warning about since the weekend transpired. The S&P 500 lost 63 points. That's a pretty good down day. We haven't seen something like that for a while, down 1.4%. The Dow lost 1%. Nasdaq lost 2.2%, and the Russell lost about 1.4%. Also, out of the 21 market sectors we follow, 18 of them were down, so it's pretty broad-based sell-off. Only 3 were positive, slightly positive. U.S. dollar gained 0.35% today, and it's up 1% for the week, which is a big move for the dollar. And as you'd expect with that move in the dollar, commodities got absolutely hammered. Every single commodity we follow was down. And precious metals, of course, really took the brunt of the hit, especially the precious metals stocks. Okay. Now, what I warned about on the weekend, or what we've been showing, is that the S&P 500 was up against resistance, these upper channel lines. It was overbought. We had very obvious negative divergences on the 10-day NYAD advanced decline versus the S&P. That was making a lower high versus a higher high in the S&P. So it tends to be a very reliable divergence. We also had a divergence between high yield corporate bonds. So it was like a perfect storm. Everything lined up. We were at resistance. We had these divergences. And what you needed is a catalyst, a match, a spark, essentially, to light the gasoline. And that's what we got last night with the Fitch downgrade of the U.S. debt from AAA to AA plus. Clearly not a good thing. Market didn't take it very well, and logically a big sell-off today. Technically, we still view this as some sort of fourth wave pullback, but again, there's also possible there's a larger top in place. But for now, we'll view it as some sort of fourth wave. Again, it could be a fourth wave of a varying degree with a sort of a shallow pullback, or it could be much deeper pullback. We'll just have to see. We'll react to the evidence that the market gives us. And otherwise, remember the key events also this week are tomorrow, Thursday, Apple and Amazon report after hours. So that's a big one. Okay, then we have ISM tomorrow, initial jobless claims, and of course the big jobs report on Friday. Let's go ahead and move on. So item number 2 below, this is a fairly large image, but basically I took what was the evidence that I discussed on the weekend and on Monday, that was where the market was really technically set up for some sort of pullback, and we got that catalyst. So I put it all in one image here. So if you look on the left, the chop chart is a weekly, and you can see price had basically was at the top of this channel, and it was also near that resistance area, the horizontal lines you see. On the daily, it was at the upper portion of the channel. And on the right, that's the NYAD, the 10-day average NYAD versus the S&P. And you can see a very clear lower high there versus the higher high in the S&P. And you can see it is now playing out with the market pullback. And you can see these divergences on the NYAD have been very reliable. Sometimes you just get little shallow pullbacks, kind of like the last one we had in late June, but it did produce a pullback. And that was there. And we also had just below that the S&P versus the high yield corporate. High yield corporate tends to lead, market tends to follow it, and it was not making a higher high. So all this together, along with in the Fitch downgrade, that was the catalyst to start today's sell-off. Next, image number 3. Here's the S&P 500 from back in 2011. Okay, I don't know if a lot of you remember that. Remember Steve and I were here, and by the way, that's the last time the U.S. credit was downgraded. And I think it was in late July. And then you could see what happened in August of 2011. The market had over a 20% sell-off. It was one hell of a sell-off. Very brutal, as you can see. Again, I'm not saying something like this will happen, but that's what happened the last time. Now, the differences technically between right now and what we had there in late July, early August 2011 is that you could see the moving averages had flattened out. Basically, market had topped out the first day of May, went down, rallied, lower high. That little break in symmetry, lower high, allowed the moving averages, the 50-day, to basically flatten out and start curling down. That's when you get your bigger sell-offs. Right now, the market isn't anything like this. All the moving averages are still pointing straight up. So the odds don't favor something like this, like we saw in 2011. But again, anything can happen. Market could do anything at once. But I'm just showing you, the odds don't favor that right now. Next. Image number 4. So if you should already be aware that I sent out a trade notification email today. So one of our reversion to mean systems finally went long. As you know, they haven't done a lot this year because the market's been such on fire, unlike last year when we saw tons of these reversion to mean system trades. But one triggered today on SPY, the Kiwi Swing 3 Momo. Took a first entry here. And you can see the stats. Profit factor of 168, which is pretty crazy. 37 trades only, 91.9% winning trades, and a good profit curve. These Momo trades tend to be very short term, maybe just a few days at best. So if we get a good bounce back, this system will exit. It does not a trend hold type of system. I sent out this trade notification just a little bit after the market closed. But remember, SPY ETFs, things like that, trade well into the after hours, 8 p.m. Eastern Standard Time. So you had plenty of opportunity to enter this if you're following these systems. Next, image number 5. That same system, QE Momo, triggered a first entry on ES as well. You can see it here, triggered that long. And here's the stats for that lower profit factor, but again, almost 25. That's still very respectable. And this one has 95.9% winning trades. So there you go. I don't know if any of you guys took this trade. It's been a while since we had a reversion to mean, but they did. One of the systems did trigger first entry on SPY and ES today. Next. Image number 6. So here's this is the taken from the website from the KISS trend systems. So on the BPT basket, AMD and GDX both hit their smart trailing stops, as you can see. Again, that happens. That's what the smart trailing stops are for. A good analogy, favorite of Steve, is the game of musical chairs. His comments are always, it's fine when the music's playing. Play along. Just make sure you have a chair to sit in when the music stops. I'm sure most of you have played musical chairs before. You don't want to be the kid that doesn't have a chair. Anyway, again, it's kind of corny, but that's what the KISS systems do. They give you that chair. The chair is the latest smart trailing stop. So they give you an exit plan. So, but those two stopped out today. GDX, I guess from the entry lost 3.17%. Again, that's doable. You take small losses like that, you can live the trade another day. And AMD lost on that trade, but remember the previous trade was a huge winner, something like 30%. So, and that's how the KISS systems do, guys. They'll catch a big winner and then they'll get a little whipsaw. Okay. When I looked at the statistics on a lot of these KISS systems, they're around 60% or so, even 50%, and that's typical of trend systems. They don't have 90% winning trades like reversion and mean systems. But again, otherwise you could see, nothing else was hit. Apple still up 37%, AVGO up 94.8%, Nvidia is up 162%, etc. Huge gains on the KISS system on these other trades. Next, image number 7. So this is also from the KISS systems. And again, I discussed this the other day on the weekend as well. But guys, remember, you can now set favorites. So go to the KISS systems, you can click on the star for any of the stocks that you want to set favorites. When you click on it, it highlights. But the system can also email you automatically whenever there's a new smart trailing stop to one of your favorites. But you got to set it up. You got to go to the favorites area, and up there you'll see a checkbox that says receive alerts about your favorite instruments. You have to check mark that. Okay, if you don't, you're not going to receive emails. But it's a very cool feature, and you should utilize it. All right, moving on. Item number 8, this is the index sector table, what transpired today, which I already discussed the major indexes, good sell-off. And for the week, everything's now down as well. As far as the market sectors, again, pretty broad-based sell-off here. Only a couple sectors that were slightly up today. Semiconductors really took it on the chin, down 3.8%. Currencies, US dollars had a good week and a good day. Someone asked me, how could the US dollar be up so strongly when Fitch downgraded the US debt? Well, think about it, guys. The US dollar is still considered a safe haven around the world. And especially when uncertainty hits, that Fitch downgrade creates uncertainty, the dollar gets a bid. Think of it a bit like this, guys. All these fiat currencies are the same. They're all crap, spending money like drunken sailors, printing presses, stuff like that. But the US dollar is still considered the best flea on the dog. I love that analogy. It's still a flea, right? It's not good, but it's the best one on the dog. So that's why the dollar gained so much today despite that downgrade. Cryptocurrencies all down today. Commodities got absolutely hammered, as you'd expect with that move in the dollar. Precious metals, remember I said the stocks needed to lead? Well, this week they did not. They really started selling off yesterday, and today was pretty much the death knell. Gold only down 0.5%, silver down 2.4%, but the stocks are leading. They've been leading down, and that rally in the dollar is not helping. So, too bad on that area. We had a potential inverse head. We had potential for a swing trade on some of these, but likely, most of you hit your stops on the stocks. The metal's still okay for now, but use the stocks lead, so we may see the metal pullback accelerate perhaps. As far as bonds, rates have had a big rally this week. That's also helped spook the market a bit as well. Next, item number 9 shows the economic news calendar, which I already discussed. Tomorrow, we have the Apple and Amazon reporting after hours. Those are two huge mega cap stocks. If this is a pullback, a fourth wave pullback, we'll see if that could produce some sort of bounce or not. Again, we have initial jobless claims tomorrow, ISM. And of course, Friday is the big jobs report. And remember, we still have a slew of economic earnings. Tomorrow being, Amazon and Apple. All right, let's go and jump to these charts. First chart below, item number 10 is a daily snapshot of the 5 key major indexes. So you can see the Dow, everything's been riding its 9 EMA. It lost its 9 EMA today. That sets the stage for at least a pullback to its 20-day. It's the middle Bollinger Band. The S&P, of course, lost it, closed right at its 20-day moving average or middle Bollinger Band. Could be a potential little bounce area. Now, on the more negative side, the NDX, Nasdaq lost their middle Bollinger Bands. That sets the stage for a pullback, perhaps all the way to the 50-day moving average. Okay. Next, image number 11. Here's the KISS systems for the four major indexes. None of these were hit, obviously. S&P is 4460. Nasdaq 371.40 or 371 if you want to round it down. Again, they're getting close. We realize that. You also have the 50-day moving average just below that if you felt like you wanted to give it a little more room. Again, that's where there's some subjectivity on these KISS systems that you could use. Again, you could either adhere strictly to the KISS stops or, if evidence presents itself, there's a major moving average close by, you could always consider giving more room. All right. You guys should consider that option, especially if you're chartists. But all these are nicely profitable from their entries. IWM still has a lot of room, and so does DIA. Remember the DIA, I talked about those wide ribbons on the weekend, and you can see that's playing out. Those ribbons only get so wide before you get some mean reversion action. Next, chart 12. Here's the daily Dow Jones. As you know, this inverse head and shoulder pattern played out beautifully, and we broke through that neckline resistance. Big rally up. Today we closed below the 90 MA. That sets the stage for a pullback perhaps to the 20-day moving average. And I know that's very simplistic, guys, but that's the markets behave a lot of times in that way. You lose the 9, then you test the 20. And of course, this previous resistance neckline breakpoint is now support. If it were to pull all the way back to there, it could be a good buying opportunity. Next, moving to the S&P 500 charts. Chart 13 is the weekly view of the S&P. Again, you can see we closed last week right at the top of this channel, right at this resistance band. We had RSI divergence. Everything was set up. We just needed a catalyst, and we got that with the Fitch downgrade. Next, chart 14. Here's a zoomed in daily view. Again, you can see the channel. Every time we've tested this upper channel line, you get some sort of pullback. Sometimes a very shallow one, but we tested it again last Thursday, dumped, and now right around the 20-day, even a little slightly below it. This pullback, one target could be this 4,400 area. That would target roughly around this 50-day moving average. Next, chart 15, there's a zoomed out daily view, same deal. Again, this upper channel line, we had RSI divergence. Everything was set up here. That catalyst came in place. So this 4450 would be your real first support. And then, of course, your 50-day moving average trend line down here. Next, chart 16. Here's the chart showing the potential wave count. And remember, I've been talking about we're looking for some sort of fourth wave. Well, looks like we're getting that. Now we'll see how deep this fourth wave is. And guys, if you go and listen to our newsletters from the late spring, before the summer, we talked about that we thought the market would hold up all through summer and then finally get some sort of sell-off maybe in August, September. And lo and behold, and that also plans with seasonality, and that appears to be working out or playing out. Next, chart 17, here's the daily KISS trend system. Again, no changes. Smart trailing stops, 44.64. Again, like I said, feel free to round those if you want to round them to 44.60. You want to use these on a closing basis, whatever. But the system is nicely profitable from that entry back in March. Next, chart 18, here's the 4 time frames. We're still holding the ATR on the daily. We lost it in all these other time frames. 130 minute, we got some little support cycle. We'll see if we get a little bounce from there or not. And same on the 78 minute. Next, chart 19, here's the 2 hour or the half day chart. Again, shows you the same channel I showed above. Next, chart 20, here's the 60 minute chart. And I showed this on the weekend. So got a little tight channel. This shows you symmetry. The largest pullback since the March low has been almost 140 points. But from the June 26th low there, the largest pullback was about 69 points. We broke symmetry last Thursday with that 78.5 point pullback. That argued for a lower high, which we got, then we broke the channel. So symmetry has been playing out. Next, Jabber 21. Here's the 30-minute wave count. I've been showing this since last week. I discussed it on the weekend. This should shift up here. This should be a wave 3. But again, this argued for an A, B, and it argued for a C move down, and that's exactly what we got today. Now, whether that is completing wave 4 or C right now, hard to say. But this is the count I've been favoring, and this played out. Now, short term, we have some RSI divergence, so we'll see if we can get a little bounce. Futures are up a little bit tonight. Otherwise, on a continued sell-off note, there are a couple of open gaps down here that should be magnets. One down here around this 44.75, and there's another gap down there. So these two little gaps could be magnets on a further sell-off. Market likes to fill those gaps. Finally, Jabber 22 is a 15-minute chart. Here's an important guide. This area right here, this 45.30 roughly, it was resistance, became support twice, so this is clearly an important level if we come back and back test that, okay? All right, moving on to the Nasdaq. Jabber 23, here's the Nasdaq, triple Qs. As you know, they've been holding the 20-day moving average, but you test that too many times, you eventually break it, and we did lose it today. The fact that we lost that really, to me, sets the stage for an eventual test of this 50-day moving average. Next, Jabber 24, here's the KISS trend system, which has been long since March 13th. It's been on a raise its stop over a dozen times. Stop is getting close at 371.40 or 371 if you want to round it. Like I said, if you really wanted to stay in the Qs and you wanted to give it some room, you could put a stop also a little below the 50-day moving average there, since it's not very far away. You could use the previous smart trailing stop. Again, guys, just be open to things if you feel a strong need to, all right? These are not 100% set in stone. Again, if you just follow the KISS systems, you'll be fine. But like I said, don't be afraid to also sometimes, override them a bit or use previous smart trailing stops, stuff like that. Next, Jabber 25, here's the 4 time frames. Interesting, on the daily, it's still holding the ATR. We got a little support cycle there. You see that dot? We'll see if we get a bounce or not. On the 195-minute, this cycle here has been pretty good lately. We bounced from it. We also found resistance at it. So I'll be watching this. You can see 130-minute chart. We sold off from that resistance cycle. We have a little support cycle in the 78-minute. Next, Jabber 26, here's the 2-hour review. We broke this channel I've been showing. Again, next support would be this next channel line, and of course, this moving average here, roughly to the 50-day. Next, Jabber 27, here's the 30-minute chart. Remember to talk about the supply zone. Price got up to there. That's where it stalled last week and capped prices. And then, of course, the big dump today. This broken trend line now is also resistance on a back test. It's possible we could bounce tomorrow, tag that trend line, and then pull back again. Next, Jabber 28, IWM small caps. They basically hit their measured move. Nice pullback. This RSI trend line is still holding for now, but that is something to watch. You have the 20-day moving average just below. Next, Jabber 29, here's IWM on the 60-minute. Price pulled back to this trend line. If it breaks that, though, then likely we'll get another salvo move to the downside. So that does it for the major indexes, guys. We'll see what happens tomorrow. Now let's move on to look at some of these indicators. Jabber 30, here's the VIX. So the VIX, as you know, has been finding support. It's been basing for the last month and a half. Was not selling off anymore. It found support as lower Bollinger Bands there last Thursday. And of course, today, big move, closed outside the Bollinger Bands. Now, this could close back inside the Bollinger Bands for a S&P VIX Bollinger Band buy signal, but it's also coming out of a base. And so there's also concern here that this could start more of an uptrend. Okay. We're definitely in the time frame August where this could happen. Next. Chapter 31, here's the VIX, this wedge we've been showing for a good month or more. Someone asked me about a potential measured move. So if the VIX does start some sort of rally here, when we're on wedges, you basically take the measured move of the wedge, you add it, and you get roughly a move to around the 24 area if this is a proper wedge and it were to play out. Next, chapter 32, here's the VIX weekly, just showing you that, again, the VIX had come all the way to this long-term support. Think of it as a demand zone. So logical area for it to try to rally off of. Next. Chapter 33, here's the 10-day NYAD advanced decline versus the S&P. And again, I showed this on the weekend. Clear lower high on the NYAD versus the higher high in the S&P, and it is now playing out. Okay. Again, sometimes you just get a little pullback like you did back there in early June. But these divergences really work out well on the NYAD, and that was a big warning. Next. Chapter 34, here's the S&P versus high-yield corporates. And again, high-yield corporates led a lower high, so that was a divergence as well. Next. Chapter 35, here's the NYMO. Now, the NYMO did close below its lower Bollinger Bands today, so be aware of that. A lot of times the market will bounce on that, but again, sometimes it'll need to go below the lower Bollinger Bands 1, 2, or 3 days before you get your bounce. All right. But it did close below today. Next. Chapter 36, here's the Nasdaq with the NASI indicator, Nasdaq summation, plotted as that histogram. Remember, I've been said to watch this histogram, go below the 3 EMA. Last couple times have been a good sell signal. Well, it closed below its 3 EMA today. Also, ABC, you see this pattern? I drew this wave B last week, indicating a lower high. Well, and a wave C, looks like my pattern was correct and likely down. We're going to go down at least to the 50-day. Next, chapter 37, here's the NYSI with the 5-3 stochastic. As I said, I'm going to keep an eye on this for a potential sell signal, trigger eventually. Beautiful long trigger back here in May, of course. But these horizontal lines here represent, you need a trigger, and none of this uptrend ever triggered, despite the stochastics being overbought. That's not your trigger to sell. Your trigger is you need a candle that goes below the previous one. So we'll be watching this. Next, chapter 38. Here's the NYSI with a 9 EMA. This is also given very good buy and sell signals, as you can see, and down today, but it obviously hasn't given a sell signal yet. Next, let's move to bonds. Chapter 39, TLT. So far this week, breaking this channel, unless it were to rally back hard late in the week, but not looking good for bonds. Next, chapter 40, here's the daily. Again, it actually closed below that channel. Big doji hammer there, but closed below the channel. Next, chapter 41, 10-year treasury yield. Again, with bonds selling off, the 10-year rates have been going up. That has not helped gold especially. And also spooks the market a bit. All right, let's move on and look at some market sectors. Follow up on some of these. Chart 42, XLK technology. Again, just like the triple Qs. Lost this 20 MA. Next target would be this 50-day. And of course, longer term, you have a trend line here. You also see you had a nice trigger on the RSI trend line break and back test. Next, chart 43, XLC communication sector. It's been just an amazing uptrend. So still holding the 20-day for now. Next, chart 44, SMH semiconductors. Here I drew a little channel to watch, a parallel channel lines. Big increase in volume today. So you have the channel line here, 50-day. That's a big area, guys. If you lose that, that would not be good, but that is support for now. Next, chart 45, here's SOXS. That's the triple inverse ETF for the semiconductors. Again, has sort of a wedge here with divergence. Should the market want to sell off quite a bit more, this would be something to trade. Maybe get a quick pop to the 50-day. Next, chart 46. Transports finally losing their 9 EMA today. 20-day moving average would be your next target. Again, this is sector's had a heck of a run from that ascending triangle where we liked it. The divergence is finally playing out. Next, chart 47. Financials, they stalled at this supply zone today. Got near its 20-day moving average, bounced there for now. Chart 48. Banks also pulling back. Next, chart 49, KRE, regional banks, that ETF, again, gave a great long, pulling back a little bit as well. Next, chart 50, utilities, they had a sell-off from the supply zone. For now, trying to bounce off this little uptrend line, 50-day moving average. Chart 51, healthcare, nice pullback as well. Out of the first rally out of the coil. We'll see if it can find support near this 20-day moving average. Next, chart 52, XLE Energy pulling back, but did close well off the low, still holding that 9 EMA. Next, chart 53, oil services also closing off those lows, still closed above the 9 EMA. Again, it is overbought up in here, but for now it's been a heck of an uptrend from that breakout. Next, chart 54, there's the weekly oil services. I've discussed this chart ad nauseum. We're in the supply zone. I do think we're going to get an eventual pullback in here. But the next rally, I think price could go through this thin zone, but I don't think it does right now. Next, chart 55, there's the bullish percent energy index. Again, it's got up in that overbought territory. Remember, the easy buy was back in early June when it was oversold. Next, chart 56, emerging markets. They're also pulling back strongly, as you'd expect with that rally in the dollar. Now let's move on to commodities. Chart 57, DBC. Had a nice breakout, as you know, the last month from this big wedge rally off the 200-week moving average. This week it's down. Next, chart 58, there's the daily. Again, had a heck of a move, starting to pull back. You do have support perhaps at the 200-day and 20-day moving averages below, but we did have a nice rally out of that wedge. Next, chart 59, crude oil, nice pullback today. Again, the key now will be if it can stay above its 200-day moving average. Remember, that was the sticking point. It regained it finally, so the key will be if it can hold above it. Next, chart 60, natural gas, still in this long-term base, but weakening here within the base. Next, chart 61, copper, had a little almost false breakout there. It broke out of this little coil, basically Pinocchio move out of this downtrend line, but not very much. It's what I call a fake out and then a strong reversal. Not looking pretty with that reversal. Next, chart 62, DBA, also pulling back. Now this 20-day moving average, you can see that divergence is playing out. Next, chart 63, Bitcoin. It's been weak this week, as you know. Next, chart 64, Mara. I readjusted the coil or the channel here, so that's the pattern it's in. Moving on, chart 65, US dollar, up 0.3% today. Again, that Fitch downgrade helped the dollar rally further because remember, it's the best flea on the dog. This did not help commodities and precious metals today. Chart 65, 66, here's the weekly. Quite honestly, again, the dollar rallied right off that 200-week moving average, bounced right off this demand zone. Next, chart 67, moving to gold. So gold, as you know, looks like Steve took this away. We had this drawn as potential inverse head and shoulder pattern, and it's still possible, but boy, this stuff has got to reverse right away. It's got to hold this 1940 area. My big problem is the stocks are not leading. They are leading down, okay? Otherwise, you got the 20, 50-day moving averages just right below there. Around 1960, that's your support. Next, chart 68, here's the gold, another gold. Again, the stocks are underperforming. These comments are from the weekend. I said we need to see stocks start to outperform. Well, they've been underperforming. Next, chart 69, here's the yen versus gold, and this was a big warning to me on Monday. This started declining well before gold. Just like last time in April, it was started moving down before gold topped. So this was given an early warning. Chart 70, here's the Swiss franc versus gold, same deal. The two are highly correlated, but Swiss franc started weakening before gold. Next, chart 71, SIL, it's a silver miner stock. Looks like this one got out of order. Again, big pullback today. We did have a break in symmetry on that rally, so there is still odds for this to form a higher low sometime. The pullback. Chart 72, silver, metal on the daily. Now it's pulled down to its 50-day moving average. Next, chart 73, there's the weekly. Again, the bullish view long term is a large inverse head and shoulder pattern. The bearish view here, shorter term, is perhaps the head and shoulder top. Next, chart 74, GDX, again, just ugly, down over 3% today. Now, it is testing this extended trend line. Is it possible it bounces off that? Yes, but man, it is retraced almost all the way. By the way, this area, this group is one of the toughest to trade that I've ever traded in my 25 years of trading. Steve will attest to that. This stuff is an absolute bear to trade. You know, sometimes it'll go on a really good trend, but a lot of times it'll fake you out and whipsaw you like you see here. But we'll see if it bounces off of this little trend line or not. Next, chart 75, here's the 2-hour view again. You know, that ABC ended up not being the case. This is too deep of a pullback. Next, chart 76, BPGDM. Remember I said it was basically flatlined? Well, it broke to the downside today, as you can see. All right, guys, following up on trade ideas. Again, most of the new recent long ideas have pulled back, which you should expect. Market was overbought, so, but you know, chart 77, Nikola, this was a long idea from the weekend, and it did give a nice pop on Monday and into Tuesday, so it did give a trade. Next, chart 78, Kava, this also gave a trade from the weekend, nice pop on Monday, but if you didn't take your profits, you've given a lot of it back already. Next, chart 79, Dada, this again, this can happen, guys. Broke out of the little coil. It's pulled all the way back in the coil. Most likely you were stopped out. If you were not, you got some moving averages here inside the coil. I wouldn't give any more room than that. Next, chart 80, VET. Another one that basically gave a one-day pop and then dropped. Again, guys, when the market gets overbought and you know you get some news like that Fitch, these things can happen. You know, where you get a long and you get stopped out. If you're new here and you know it was your first trade and you were stopped out, don't get discouraged. View trading like a baseball player. It's your long-term average that matters, not your last one or two at bats. Okay. Next, chart 81, BTBT as well. Broke a little trend line the other day, pulling back again. It could still recover here. It's holding its 20-day, but I'd like to see it rally off of this. Next, chart 82, NEO, which has been the star, finally gave some profits back today, but still above its 9 EMA. But hell of a move out of this pattern. Next, chart 83, RVLV. This is a long idea from a month ago. I said to trail the stops up to the higher lows. If you did, you'd likely be stopped out now. But it's a winning trade nonetheless. Chart 84, VNet. This is one that popped out of this base, still holding around here. Next, chart 85, VBTX, one struck. Recent long idea from last week. It's holding in here fairly well, but again, it's going to depend on what the market does. Chart 86, Diamond Offshore. I drew this as a coil on Monday, broke down for a short. Next, chart 87, VRTX. Here's a new one. Big move today on good volume. I think it was earnings, but I like the 60-minute chart. Here's the 60-minute chart. You got an obvious bull flag with that volume. One to watch for tomorrow. And Charber 89, FNGD. This is the inverse FANG ETF. You got a nice base forming. Again, it's going to depend on what some of these earnings come out like on Amazon and Apple. All right, guys, that'll do it. We'll see what happens tomorrow. Again, plenty of news with various economic news and earnings and jobs report on Friday. So have a wonderful rest of your evening. Thank you for your support. Take care.